Hi everyone, it's Sean from STK Markets again. I've got MD CEO Aaron Revelle from Pursuit Minerals here today. Aaron, good to see you, mate. It's been a cracker of a year for Pursuit. Things are moving in all the right directions for you.
Sean absolutely has.
We've seen the dual commodity strategy that you're utilising. It's worked for a lot of other companies, but you're in a really special space. You've got the gold assets, which we thought looked like what we first saw at Southern Cross, where you've got the big next door neighbour like Fosterville. I believe it's Newmont in Argentina, where you've got these big multi-million ounce systems at very high grade. But you've also got lithium, which is really changing at the moment for the better. And I think this is a sleeping giant, which what you've got there.
Absolutely. And we have both projects in very key locations. Firstly, in Argentina, which is now considered a tier one address, with Rio Tinto and BHP combined investing over $10 billion in 2024 into the jurisdiction. But if you look at our lithium, we're surrounded by the Rio Tinto acquisition Arcadium. Rio Tinto now owns several operations within several hundred kilometers from us. But equally, our gold project, Sasha Marcelina, 100 kilometers south of Cerro Negro, owned by Newmont. So we're in a tier one jurisdiction with some very impressive companies surrounding us, with two projects that have different approaches, but both have the potential to add significant value for us and our shareholders. Namely, with the gold, we've just released an announcement showing those depth targets, the 400, 500 meter drill program outlining some very impressive targets across that silica cap at Marcelina and also the Sasha main vein. Also on this, simultaneously, we're completing our feasibility study, the 5,000 ton study for the lithium carbonate operation at Rio Grande Sur, at a time where we're seeing ESS storage really push demand and price appreciation in the lithium space. So lithium, whilst it's been difficult over the last couple of years, we're seeing now a return of positive sentiment to the sector, which is really benefiting our projects and the prospectivity as we move forward into 2026.
What we've seen, and we completely agree with you, is the Morgan Stanleys of the world have got massive price tags on lithium up to 28,000 from where it is now. I think it's more than double for where it currently sits. The numbers on your lithium project should be out towards the end of January, beginning of Feb. Obviously, we've got the Christmas break, but we're hoping that those numbers look fantastic. That should get a lot of eyes on your stock. Is there anything you can allude to there? Because quite frankly, it's very, very exciting from our point of view with AI, this battery storage, which has taken the market by surprise. There's I think, a big uptick for 2026 or 2027 financial year over the next year and a half. A lot of upside there.
Well, we can't allude to anything yet, as that study is in the final stages of being completed. However, I can say we are an Argentine project. We're in the lowest quarter of the cost curve. Brine projects historically have always sat in that position on the cost curve. So for us, sitting there in the lowest quarter, when the price starts to move up, and you are seeing drastic appreciations, we're sitting at around 13,500 ton to 14,000 per ton now. Lithium earlier in the year was 8,000 per ton, nearly dropped into the 7,000 per ton range for lithium carbonate. So when you go from 7 to 14 to 25 to 30, the numbers on these projects get significant. And from our perspective, we're very excited about what we're seeing in the market and how that will filter into the results of the study.
You've had a lot of people, a lot of businesses in the market have a look at your product. The product stacks up, doesn't it?
Absolutely. And that's a key differentiator for us. We're producing that 99.5% technical grade lithium carbonate, which has gone to offtake potential partners in Asia, in Europe, and in the States. So from that perspective, it's the product demand that people are after. This is the product that goes into your energy storage systems, into your LFP batteries in the EV space. And frankly, there's not enough of it in the market. And we're seeing that supply crunch now starting to creep forward. It was forecast in 2030. Now it's coming towards 27, 26, 28. So from our perspective, the product stacks up, and the operation, we've specifically staged it with a lower entry at that 5,000 ton level, where the capex is significantly lower than, say, a 40,000 or 50,000 ton operation, which is being very well received from potential partners. So not only do we have the product, but we have a tangible, viable pathway to market, which really sets the project amongst our peers out and really gives Pursuit that point of differentiation.
So you're not talking billions and billions in terms of raising to build a plant. What type of numbers are you talking about?
So we're in the low hundreds of millions, and you can see that if you take various projects that have come out in the market, 20,000 ton studies, and you divide them to get that 5,000 ton level, you'll get to that area, and that's where we are. You know, we're in that lower the lower capex threshold, which really creates a bit of excitement because it's feasible. You know, once you get to that level of several hundred million market cap, it's quite hard to then go and say, hey, we need $1 billion on the balance sheet. Whereas for us, we have something that can be financed. The debt coverage ratios look great. The serviceability of the project looks good. So for us, there's a lot of non-dilutive financing options available just because you sit within that size of capex and not in the billions that we're seeing in the market for a lot of the other projects in Argentina.
Aaron, you've got a very small market cap at the moment of 15 million. You've got two fabulous projects that are sitting there. The conversations we've had, the research we've done into the business, the lithium stacks up on its own. That looks extremely, really, really good. I mean, you're looking at 100 million valuation there potentially based on a 15 million market cap at the moment. You've then got the gold project, which, as we saw, looks very similar to Southern Cross, not in terms of geology, but in terms of its location to a major. You have those high grade drill results already. You've already had drilling results with high grade gold. This is all stacking up to be quite a beautiful Christmas for you going into the new year once those drilling campaigns are done.
Absolutely. And as you mentioned, we have two key value drivers that frankly are both standalone. These projects could sit on their own within a company and be the sole value driver, but for different reasons. So going to the lithium, we've done the hard yards, million-ton resource, bringing out feasibility at a time when the market's shifting from surplus to deficit. So you're going to have people looking for that supply side response, and we're squarely in the equation there, which creates multiple value-adding drivers through the positive feasibility study, the potential of offtake supply agreements, further drilling in the north at Mito, which we're actively evaluating, which could significantly expand the resource. So these are value drivers for the lithium on its own. Then conversely, you have the gold. The gold, as mentioned, it does have the preliminary drilling, but this was all shallow. It confirmed that the mineralisation existed. It's shown the trends. It's shown the strike, the 2-kilometre horizon at Sasha Main, the Pellegrini silica caps. Those are the ones now going down where we can drill into the boiling zone, deep 400, 500, 600 meters. And for us, we've just put out an announcement that shows those targets, the resistivity layers, the geophysics really stacking up, giving some great, potential mineralization there at depth, which is what we saw at Cerro Negro, 100 kilometers to the north. Cerro Negro had substantial amounts of drilling before that 5 million ounce system was discovered. So from our perspective, Sasha Marcelino represents a very rare opportunity for us to go in and do some immediate deep grade drilling and hopefully have some of those company changing hits, which again create those value drivers where from a gold perspective, it's doing that exploration where you do your first 2,000 to 4,000 meters. That then has some great hits, which the intercepts come out, which is a value driver in itself. And it sets up a larger exploration play where you're then starting to define a resource, expand out that resource. The project still has a lot of underexplored areas in it, which we've also identified in that announcement, that again, additional drill targets where you're walking up the steps. So both projects present a very nice opportunity for multiple re-rating drivers and value-adding programs as we work through 2026.
Aaron, it just sounds so exciting. The path is there. I know we've put quite a bit of money into pursuit over the last two raises, and I actually had the fortunate luxury of meeting a few of your other big shareholders over the week. Everyone's got the same mentality. We're all holding our stock here. This is one to let you go to do what you've got to do. So we've got a very tight register. We've got aligned investors with us. So when we move forward with this, there's really only one way the share price can go with the shareholders that we've got. We've learnt that from Mike Hudson. You need a good aligned shareholder base to get that appreciation. And that's what we've seen with Southern Cross, which is approaching $10 at the moment. So, Aaron, it's been very exciting to be on the journey. We're looking forward to continuing that journey. And I can see by the little smirk on your face that you're very happy with what's going on, which is very telling to me as an investor. So you're invested, you've got your shares, everyone's got the right, I guess everyone's aligned to move forward.
Absolutely. We have a very tight top 20. In fact, the top 50 is a very tight register in itself. So for us, we're all aligned on the journey. The major shareholders are very much invested in the lithium thematic, very much invested in gold, and we've seen these play out. Myself having built a company that's had a successful exit along the line. The last asset that I founded eventually sold for 340 million at the last peak of the lithium cycle. So for us, as we approach that lithium cycle, and we're starting on that uptrend now, we're getting very excited to be in the right place at the right time with both commodities. Gold is, again, above that 4,000 an ounce threshold. A lot of analysts looking at the 5,000 per ounce threshold now. So for us, we've got two great projects, a very tight register, and a lot of potential to re-rate the company through different valuating work streams as we progress over the first half of 2026.
Well, I think that's fantastic. One thing I want to highlight is that the last time lithium ran, there was an 8% deficit in the market. Now, from the different reports that we've seen, and I can't go to them at the moment off the top of my head, but it's looking for about a 4% deficit in the market this year. So you're not talking big numbers of deficit for this price to really rocket in the lithium market, are we?
Absolutely. And more importantly, the last time that we had that 8% deficit, there was a pipeline of projects that were coming online. So we had a pipeline that was being built, or projects that were under potential investment decision. That pipeline doesn't exist at the moment. A lot of these projects have now met the supply side response. So the bigger question is, yes, you're going to have that deficit, that 4 to 8%, but how quickly is it going to materialize as demand continues through grid storage systems, through EV demand? China is still producing a lot of EVs, a lot of purchases, 20 million units per year now. So from that perspective, that deficit could actually grow, and it could grow materially quicker, especially where there won't be this supply side response of projects. So from our perspective, the lithium market is about to go on a bit of a journey now, where you're seeing ESS really push demand. And the question is, okay, where is that supply side coming from, and what impact will that have on prices? A lot of banks are now looking towards that 30,000 ton mark. But as you said, the last deficit, 8%, that caused prices to go to 80,000 per ton on the spot market for a period of time. So we could be in for a repeat of that. Only time will tell, but the fundamentals are looking very strong for lithium prospective developers at the moment.
I think the reality is you've got your PFS coming out. Off the back of that, you can get offtakes, you can look at funding agreements. So there's a lot of news flow just on the lithium for next year, as well as the gold results.
Absolutely. And that's the PFS has been a big thing for us, as that's the mark in the sand that gives people the numbers on the project. It looks not only at the equity basis, but the equity and debt basis of the project. We've really developed this to a high level to focus on those agreements as what comes next. We're not MPV chasing or anything like that. We're looking to develop that lithium project. So for us, it's fortunate timing, as we're very bullish on the gold. Obviously, Pursuit is chaired by Tom Eady, who's the chairman of Southern Cross Gold and a very big gold bull at the moment. So from our perspective, we have two commodities. We're at the right time, the right place, and both have significant drivers that we intend to accelerate through the first half of next year.
Aaron, I can't thank you enough for your time this morning. I wish you and the team a Merry Christmas, and I look forward to getting back on deck in mid-Jan to update investors again as to how everything's going. And good luck for next year. It's going to be a really exciting one for Pursuit. We're certainly shareholders at STK, as we always are. We invest alongside our investors, and I'm going to hold on to these shares. I've actually been picking up a few in the market the last couple of days.
Thanks, John. We appreciate the support, and we're very excited for 2026. And we're looking forward to getting through the Christmas period. And we wish all our shareholders and investors a Merry Christmas. But we're looking forward for 2026. It can't come fast enough for us.
Thanks, Aaron.
Yes, thanks, John.